Good evening, everyone. My name is Mackenzie Drake, and I'm the Artist Development Manager for the South Carolina Arts Commission. Thank you for joining us for the Artist Entrepreneur Incubator session of Show Me the Money, Financial Management for South Carolina Artists. This program is presented in partnership with the South Carolina Small Business Development Centers and is the fifth and final program of our business development series. This program will be recorded and available on our YouTube channel, and it will be listed on our website under this program information for future reference. Whether this is your first Artist Entrepreneur Incubator or you've been with us before, this program is created to provide resources for South Carolina artists to level up their freelance businesses. As part of this program, we identified skilled instructors and presenters per topic that can help you grow and sustain your arts business and practice. You're welcome to register for as many programs as you'd like, as many times as you'd like. At the end of the program, you'll receive a feedback form that we ask you to fill out. Your feedback is incredibly valuable as it helps us to ensure we are building a robust program schedule that helps you as artists. Completely optional, but to get a sense of the Zoom room here, I know we're on webinar tonight. You're welcome to introduce yourself, what city or county you may be coming from, and your artistic discipline in our chat. You can share this with everyone or just with us as presenters. We love to hear where y'all are coming from. As a Zoom webinar, we encourage you to submit your questions through the Q&A feature. We'll have time for a couple questions at the end of the program. You can also try to drop them in the chat as well if the Q&A is difficult to reach or find. But otherwise, I'd love to introduce our presenters for today. Jim Johnson is a seasoned senior business consultant and food systems specialist at the South Carolina Small Business Development Centers, affiliated with the University of South Carolina in Columbia. With a robust entrepreneurial background, he brings expertise from owning and operating businesses across healthcare, hospitality, and property management sectors. Jim earned his bachelor's degree from the College of Charleston and holds an MBA from Claflin University. He's a graduate of Clemson Palmetto Leaf Leadership Program and South Carolina Economic Development Institute and holds certification as a global business professional. Jim's consulting focuses on food systems encompassing agribusiness, hospitality, and tourism, alongside interests in international trade, environmental sustainability, energy, property management, and business acquisitions. He has held significant leadership positions and roles across various community development and Chamber of Commerce boards and is honored with awards such as Business Person of the Year and SBDC State Star, and is an adjunct business instructor at Claflin. Thank you for joining us again, Jim. It's been great to have you for all of these programs. I really appreciate it. And Lacey Bates. Lacey is a professional dancer, choreographer, and educator from Myrtle Beach, South Carolina. She earned a BA in Dance and Arts Management from the College of Charleston and her MA in Education from Holy Names University. She has performed across the Southeast and in the San Francisco Bay Area, such as with companies such as Annex Dance Company, Push Dance Company, Visceral Roots Dance Company, Prince Dance Project, A Paluzzo Dance Project, among others. Lacey has shared the stage with entertainment artists such as Weird Al and Beats Antique, and she served as co-artistic director of Collective SF, a collaborative dance company. Lacey has over a decade of teaching experience in public schools, nonprofits, and renowned institutions like ODC and Alonzo King's Lines Ballet. After 5 years in the Bay Area, she returned to Charleston in 2023, where she continues to contribute to the dance community as a public school dance instructor, a performer with Elevate Performance Company, and the artistic director of Collective SC, a Charleston-based dance company dedicated to delivering fresh, innovative perspectives on contemporary dance. We are pleased to have you two join us. Thank you so much. We're going to start off this evening with Jim to share a little more about the business of art mindset, and then we'll move to Lacey to present on bookkeeping basics for artists. And then we'll return to Jim after that. Jim, I'll let you start us off.
Okay, thanks, Mackenzie. Appreciate it. Uh, and yeah, I think this is a great topic. This is definitely one that there's typically a lot of interest in. I think that's for good reason. All businesses, there's basically three aspects. There's the operations, there's the marketing, and there's the financial piece. In my experience, I'm working with tons of businesses over the years. The weakest, part of most people's activities are in the financial management part of the business for various reasons. We're all made a little differently. Some of us are a little bit more analytical than others. Some like to look at numbers, and some run as fast as they can from numbers. But there's one thing that you can't really run from in business, and that's, the fact that, it's based on numbers. You have revenues, you have expenses, you make profits, and understanding how all that works is important as a business owner, whether you're an artist or, you're selling food or whatever the product or service is, something you have to be concerned with, mainly, for the sustainability of the business, right? If you want this business to be strong, you want to stay around, you have some goals around what you're trying to do, obviously on your creative side, but also, hey, I want this business to support me. I want this business to pay my rent. I want it to put food on my table. I want it to buy things that I need, right? So that all comes back to how you manage the money and where the money goes and how you best utilize it, right? So I like the idea around the title of "Show Me the Money." So really, you're trying to show me the money in several different ways. One is like, where is it actually going? Where did all the money go, right? How did I spend it? As part of looking at your expenses and things like that. And also show me the money is like, where's the income? How am I getting money in here, the revenues and whatnot? And also show me the money, I think also speaks to um, grants and loans as well. So show me how I can get loans, show me how I can get grants. Well, one way you're doing that to any lender or grantor who's investing in your business, right? They're almost like a partner in your business. They're investing in you, is you're showing them that you're a good steward of of your business and through your financial statements, and that you manage the business well, and you're showing profits, or you're showing improvements in your revenues and things like that. So part of being able to show the money is showing to potential investors, whether it's loans, grants, or equity investment, right? So all really important. And then of course, the first person as a business person I always paid was the tax man. They were like number one on my list. Paid them first, um, because you had to keep them happy. Yeah, and financial management, um, really impacts how you're taxed in the end, and how much you might pay in taxes. So all important aspects of financial management, much more than that. We'll dig into it, and excited to see Lacey talk more about her perspective of how she kind of does her bookkeeping as an artist and creative, um, and looking forward to that. So I'm gonna hand it over to you, Lacey, and let you go from here.
Sounds good. Thank you, Jim. All right. Hey, everybody. My name is Lacey Bates, and I'm going to be speaking about bookkeeping for creatives. So, our favorite topic as artists, right here. Just to introduce myself, I'm a professional dancer, public school educator, and artistic director of Collective SC, as Mackenzie told y'all about. Super excited to be here and be speaking with y'all about what I've learned so far. So, Collective SC is my dance company that I run here in Charleston. We're a contemporary dance company. I established it in 2023 when I moved back to Charleston, really trying to fill the gap of not so much professional dance happening here in the South. And I've learned a lot about financial management. I still have a lot to learn, but I'm going to share a little bit with you about what I've learned so far. I currently operate my dance company as a sole proprietor under a nonprofit fiscal sponsor. So my presentation comes from that lens, but I hope my advice can be applicable for all types of businesses. All right. So, what is bookkeeping? All right. So, bookkeeping is essentially just tracking your income and expenses of your creative business. And when I say income, I don't necessarily mean profit. I mean any income that you get from your art discipline. So, even if after your expenses you ended up with a loss, you still need to track any income that you make. And why does it matter for artists? So, like Jim spoke about, if you generate income from your art, you are running a business. So, keeping your books in order helps you stay organized. It simplifies tax season. You don't want to sit back and let that go. And it also allows you to plan and budget for upcoming projects. And like Jim mentioned, make you attractive to donors and partnerships that can help your business grow. All right. So my biggest piece of advice today, if you take away anything, is to separate your finances. Separating your personal finances from your business finances is super important, even though it can be hard as an individual artist when everything's intertwined. I know. But what I did was create a separate bank account and just make sure all of the money flows through there. Um, so that way you keep everything separate. And this doesn't have to be complicated if you're an individual artist like me. For example, when I first got started with Collective FC, I just opened a separate checking account and moved everything over there. And then you also want to get a debit card for that account and make sure you just use that card for everything. It's easy to get mixed up and maybe pull out the wrong card, but just, whenever you're having a business, you're going to make a purchase for your business, make sure you use that one only. All right. And then a little more fun, income. Yes, we like making money. So it's important to track your income, any income you make that has to do with your creative business. So things, for example, that could include ticket sales, art sales, grants, donations, teaching or performance payments, and more. Be sure that you record the date, the source, and the amount when you're tracking your income. All right. And then you also got to track your expenses. Not as fun, but these will be super helpful when it comes tax time because these are things that you can potentially deduct. Again, I'm not a tax expert, so speak with your tax professional about what you can deduct for your specific kind of business. But sometimes it's more, for me, I've been surprised by things that I can deduct. So definitely record everything. Some examples could include studio and theater rentals, supplies, costumes, marketing costs. So if you have a Canva subscription, if you're printing flyers for an art show, all of that stuff is expenses that are helping your business grow. So they need to be recorded. Contractor payments, if you're hiring people to help you, if you're I hire dancers or a lighting designer, a photographer. Definitely record all of that. And then don't forget about professional development as well. So if you take a class or go to a conference or an intensive to get better at your art, that is benefiting your business. So make sure to record that. All right. And there's some tools to help you do this, right? So it can be as simple as a Google or an Excel spreadsheet. No need to pay for anything if that works for you. But if you did want something a little more involved, there are a lot of different accounting softwares that can help and they have some benefits. I use QuickBooks, for example, and it offers different features like directly connecting your bank account. So then it kind of automatically starts recording all of your expenses and your income into different transactions. You have to go back in and categorize it, but it's really helpful as a place to start. And then it also, for me, I have a lot of contractors, so it generates 1099s for me when it's time to send those out. So it just depends on you and the scope of your business. Do what works best for you. Keep it simple if that works for you, is my best advice. Um, Also, make sure you're evaluating your finances when you're doing this bookkeeping and determining whether you're making a profit or you're making losses from your creative projects. Sorry, not making losses, having losses. Um, and that'll help you plan for the future and it'll help you adjust your budget as needed. All right, and create a bookkeeping routine. So this is super important so that things don't pile up and you don't get to April 15th, freaking out because you got to go through all of your personal bank statements, right? So create a routine to record your income and expenses. Again, it depends on the scale and scope of your business. This could be once a week, this could be less. But allocating a specific time will reduce stress in the future. And be sure to save your receipts. Make sure you save receipts for all your expenses, invoices from your contractors is crucial. You'll need these are just good business practices because you'll need these documents in the event of an audit. Okay, and lastly, you got this. So just start simple, stay consistent, and bookkeeping can be manageable. It doesn't, have to be some stressful thing, but it will benefit you because gaining a clear understanding will assist you when you're applying for grants and when you're making informed decisions about future projects, and it'll ultimately help your business grow. All right. So lastly, thank you. I'd love to stay connected. My social media for my company is Collective SC Dance. My email's there and our website's there as well. Mackenzie will be sharing this information out after the session. But yeah, I appreciate it. I'm going to pass it back over to Jim.
Do you want to jump in real quick, Mackenzie, or?
I might for just a minute just to say thank you, Lacey. Lacey will be staying to the end of the program. If y'all have questions, you can put them in the chat or in the Q&A here. But we'll move on to Jim. But I am excited to get back and have questions with all of you at the end. So Jim, I'll let you take it away from here.
Awesome. Thank you very much. And thanks, Lacey. That was a great presentation. I like the last slide with "You got this." Um, that's for sure. I think anybody can do it, financial management. And sometimes it's just you got to start somewhere, right? And just start with the small things if you can. Just have a separate checking account, and that's kind of managing some of the income and expenses and seeing at least the cash flow in and out, right? So that's like the bare basics. If you can start there, that's a good starting. And then, kind of leveling up to accounting software, getting more sophisticated over time. If you need to do that, that's great. Um, and if you do need to hire other people eventually, which I know a lot of folks do, once you get to that uh, level, then you have the ability to do that. Some people like to outsource the accounting if they can, but I think most people are perfectly capable of managing it. So yeah, we're gonna go through a few things here on financial management, and hopefully this will be beneficial to you. Learn a few things, and of course, if you have questions, please put them in chat. We'll try to address them. I myself am not a CPA. I have been doing business accounting for a good little while, probably I guess 30 years or so. Um, so I've got a lot of experience and I've been helping people the last 10 years in business consulting. And typically I'm not doing the accounting like, the everyday inputs. But I'm more on the analysis side, right? I'm helping look at the books and say, hey, this is some things that we can do, maybe to change your status. Of course, we talked a little bit about SBDC. SBDC is no cost consulting. So our services are free. We have 21 offices in South Carolina, over 50 consultants. So there's an SBDC probably near you, whether you're in Myrtle Beach or Charleston or Columbia. Um, you can find SBDCs and qualified consultants. We do have some like um, accounting specialists on staff. We have like I think maybe two or three consultants that's like their CPAs or their background is specialty. That's their specialty. So like if I have someone come to me with accounting issues that I don't feel like I'm comfortable addressing, or I need some extra support, I have internal folks that come in and co-consult with me and can help with the books and things like that. But yeah, SBDC is a great resource. It's free. It's your tax money. I'm at the University of South Carolina. So we're all hosted by state universities in South Carolina. So yeah, I kind of went over why financial management matters. It's very important to any business. And I like the financial discipline equals creative freedom because it is a discipline, it's a behavior that you need to repeat over and over, and then finally it just becomes something that you do on a regular basis, a good habit, right? And we all want to get disciplined around certain things, whether it's our health or it's our, attention to our art and doing work there, or it's to the books in the business, right? So very important. One of the things about financial management and your business, and I'm mostly speaking from the point of view of for-profit business, right? I deal mostly with for-profit, not as much with nonprofit. So when we start speaking about nonprofit stuff, you're getting a little out of my wheelhouse. I've served on a ton of nonprofit boards and have been involved in standing them up, and I have a lot of experience with nonprofits. Is just not like where I usually advise or give advice. Um, and the rules are a little bit different for some aspects of a nonprofit entity. So today we're talking more about the for-profit um, business. And when you start to think about financial management, paying yourself and how money flows, you really start thinking about first the business structure, because that's kind of like the birth of your business. It's like how you're treating it initially. And that will determine, how you're taxed and how, money flows. So it's a big consideration. Most artists and a lot of small businesses start off as just sole proprietors, which essentially, if you went out and just started doing business, you're selling pottery at the market, and you're making some income. You're paying for that pottery reel and that clay and the glaze and all that stuff. Those are your expenses, and you're making a little bit of money. You don't need to do anything else. You are a sole proprietor. And once you start making over $600, that's when really you need to get licenses, which we will talk about later, in filing tax returns, like a Schedule C tax return as a sole proprietor. When you're kind of like doing some small things here and there, it's not really something that, the IRS or Department of Revenue is really concerned about. But when they see you, starting to make some substantial money on a consistent basis, then they're like, hey, you need to formalize this, right? You need to, create your business, do your tax returns, and keep up with it like it's a business, right? But the easiest and the simplest structure is the sole proprietor. You really don't have to do anything. You can use your social security number. You don't even need to get an EIN. But I definitely recommend getting an EIN, which is employer identification number. It's basically like the social security number for your business, right? Without having to use your social security number. So why would you want to give people your social security number, right? So get the EIN, you give them that number. Because people will ask for it when you open accounts, bank account, vendor accounts, they want your EIN and your business name. Kind of the second level of business structure is the partnership level. I'm gonna skip over LLC for now. Partnership is basically when you have more than one person involved in the business. It's still much like a sole proprietorship in that everything kind of flows through to your personal tax returns. It's passed through. You definitely, if you're doing that, you need to have a partnership agreement in place. And these days, you can go to AI, you can go get these like online legal Zoom partnership agreements. But if you're going to do that, I still recommend seeing like an attorney um, just to review the forms. And it probably won't be as expensive as you think it would be just to go to the lawyer to have them kind of review an agreement, or even for them to do kind of like an agreement, because this is something they kind of do on a regular basis. And the laws are nuanced to South Carolina, right? So sometimes when you go out to AI or you go to LegalZoom, it's these, general agreements, but every state has their own laws. So where something might be um, legal here or upheld here might not be in New Jersey or in Nebraska, right? So that's why you get a local lawyer to review this and say, hey, does this all look good? And the thing about the partnership agreement is I probably really don't have to tell y'all, but things can go wrong in partnership. Imagine that, right? And so that's what the agreement's for. It's a piece of paper that points to what happens when things go wrong. Who owns how much and what do they own? All these questions that might need to be answered in case of dispute, or just for, clarification of what your mission is, and, what you're trying to do. And, it can all be in that agreement. So I would definitely recommend getting that partnership agreement. Comes back to money too. That's money management, financial management, right? Who owns what percent? How are things dealt with money wise, right? So this is good financial management within the agreement from the onset of the business. Um, so both of those sole proprietor and partnerships, there's two ways to look at business structures. One's through a tax lens, and the other is through a legal liability lens. So you're kind of looking at two different things. When the IRS looks at you, they're saying your tax as a sole proprietor, your tax as a partnership or S corporation. They don't typically look at the LLC designation because that's a state designation. And what the LLC is it's a limited liability company, right? It's going to protect you from lawsuits. It's protects you, the liability, right? It's liability protection. Whereas like under sole proprietor and partnership, you don't have a liability protection. So basically, your personal assets are subject to if you get in the lawsuit, they're open, to being part of that lawsuit. Whereas an LLC basically creates a wall of separation between you personally and all your personal assets and the business assets. And honestly, most people, I'm going to say, hey, get the LLC. Number one, it's inexpensive. It's $135 or something like that. I think 135 that includes the online processing fee. 110 plus 25 processing. Get the LLC. It's inexpensive. It protects you from the liability standpoint. It doesn't change anything tax wise. It's a pass through. So, you act as an LLC, but your tax is sole proprietor or maybe even a partnership if you're a multi-member LLC. So honestly, why not do it? It's basically the same as a sole proprietor or partnership, but you get the benefits of liability protection, right? So it just makes sense. Most folks that I know get the LLC and do that. But if you're going to get the LLC, when you go to start the business, or even if you're operating now and you didn't do it, um, the reason you do it, you do it first when you start the business, because then you can get all your licenses and sign all your contracts in the name of the LLC, right? If you're already in business, you're kind of, already filed tax returns, you can change to the LLC um, entity, but you're going to have to go back and maybe change some of your licenses, the names on them and stuff like that. So, because you want to do everything through that name, that's part of the liability protection, right? If you're not doing business in the name of the LLC, there may be lawyers can break the veil of the LLC. So all your contracts and everything you do, utility bills need to be in that company official name. There's another a couple other business structures, the S corporation, C corporation. Not going to talk about the C corp because that's like typically not done for most artists. That's like a bigger company. Um, Most folks are, at that point you get investors and things like that, selling stock possibly, whatnot. S corporation though is a natural evolution of the LLC and sole proprietor and all these other ones. Most people don't jump into the S corporation immediately, especially if you're kind of small business, maybe a creative business, just yourself. You're gonna jump into S corporation whenever you get to a certain level of income. And when I say income, not revenues, but like income that you're paying yourself, right? The profits, when your profit hit a certain level and you want to reduce your tax liability, S corporation will start to make sense. And I'll show you a little bit later. We've got some exercises and examples of when does it make sense to go S corporation? Probably when you got a payroll and you want to put yourself on payroll because you have to put yourself on payroll when you're S corporation. So you have to consider that too, right? Can you even go to S corporation? If you can't put yourself on payroll, then really can't be there. You can have a payroll without being an S corporation, but you just can't, like as an LLC sole proprietor, you can't put yourself on payroll. You can hire other people on payroll, but you can't put yourself on payroll. You can pay yourself in a draw, and we'll talk about that a little bit more later. So some of the key considerations behind, but with business structures are how are you protecting your assets? That's a financial consideration, right? Because assets equal value. Assets are what are producing income for you, right? So if you have a piece of equipment, a pottery wheel, the pottery wheel helps you produce, your creative pieces. So that asset is actually producing income for you, right? And is that protected? And is, all the money that you have in the business protected, right? LLC or S corporation. S corporation essentially does the same thing as an LLC, protects you, lot your, creates a entity. One of the differences is LLCs is a membership, and you can actually sell shares of your membership if you want to. S corporation is a stock company, so you can sell stock or shares in the corporation. It's another method for bringing in raising money if you want to do that as well. So taxation, how your income is taxed, kind of mentioned that a little bit. Pretty much all those business structures are passed through, which means, you know, your business is going to have a profit, and then that profit is going to flow through to your 1040 as income, right? Um, but if you're an S corporation, you might have yourself on payroll, so there's different implications to that. Administrative burden, like, yeah, an S corp is going to be more administratively complex and expensive, and you have to have a board meeting every year, which could just be you. And you have to do some other things. You'll have to file separate tax returns. So it's just not like a schedule, C on your personal tax return. It'll be 1120 for the business return, and a few other ones. But anyway, if you have a partnership, so yeah, a little more complex. There's more growth potential, like in a S corporation or an LLC, because like I said, you can actually sell stocks if you want to bring in investors into your business. You might can access funding. You get a little bit more credibility when people see that you're a corporation, versus just a sole proprietorship, if that matters to you. And there's a little bit of IP protection in it. If you got an LLC, at least, you had to register that with the state and nobody else can use that name, right? So there's a little bit of protection there. You might want to go further with IP protection, and that's a whole nother, seminar, which I'm sure that McKinsey and those, I think they've done some IP stuff in the past. One question I get a lot is, does business as DBA or a trade name? Like, can I just use that? Do I have to register that? What's the deal with the DBA? Well, South Carolina does not have a DBA registration requirement. Some states you go to, you actually have to register the DBA, along with your legal name and stuff like that. And of course, they want you to, pay for that, and there's ongoing payments, in some states. Same thing with like LLC. Some state with an LLC, you have to register it and you have to keep paying for it every year. Like in South Carolina, you pay it one time and that's it, done, until you dissolve it. The DBA is don't have to register it, no fees. You can just use it whenever you want to use it. Um, it doesn't protect your name legally. It's kind of like a trademark. Um, the thing about trademarks is like if you put the name out into the marketplace, there is a common law trademark on it. So there is, but it's only recognized within the county that you do that. So there's some interesting protections around how you use that, but not a whole lot of strict restrictions around DBAs, really no limits to what you call your business. You might be, um, Lacey Bates LLC, but you call yourself the dance studio, right? So just always get that question a good bit. Um, So, want to talk a little bit about self-employment taxes. This is something people don't think about a lot, especially if you're like a single member LLC or sole proprietor. Uh, you pay yourself, it's called a draw. So you can just take money out of the business, right? And, it's a draw, and any profits that you make on the business are subject to self-employment taxes. And I'm going to show y'all a little bit later the P&L, income, how income and expenses flow and how profit, is left over there. But any profits, are taxable, for a business. And a lot of the goals of a lot of businesses is reduce that bottom line. People spend money sometimes. It's deductible money, eligible expenses, hopefully, just to reduce their possible tax burden. Um, and because you're supposed to pay these self-employment taxes, and how you come to that calculation is typically um, it's a 15.3% tax on your income. There are like after you have your bottom line profit, there are deductions. I don't want to get too into the weeds because I'm not an accountant. I don't do taxes for anybody. I just know how it works. But there's are certain deductions for small businesses that reduces your liability too, right? So you get that deduction, then it's after that deduction that you're going to try to calculate what you owe in taxes. But there's an example here where you make $100 profit, your estimated taxes are 22%. That's based on your tax bracket, right? That's your income taxes. And then there's an additional 15.3% SECA taxes. Um, that's your self-employment contribution tax, right? And so if you add all that, it's like 37.3% in taxes is what you're paying. Um, yeah. So after that net taxes, after that $100 profit, you're getting 62.70, right? And so a lot of people they don't like set aside any money during the year. They just wait to the end of the year and kind of see how things like see how the dice are rolled and how they land, right? And then they're like, okay, I owe money, I don't owe money. Just tell me, just give me the news, right? So at least through, good financial planning, you kind of know what to expect to either pay or not pay, right? And taxes can be very complex. There's a lot, everyone's individual, right? So you might end up like getting money even though you owed all these taxes. It just depends on what your situation is, right? But this is just to show you a simple example. So you do have these 15.3 And that goes to your Social Security and Medicare, right? So you'll want to pay into those because, when you retire one day, hopefully if Medicare's still around and Social Security, um, I'm probably getting it before most of y'all, so it might still be there when I'm ready. It's just the age is going to keep going up and they're going to keep changing things. But, that'll be a payment that you get supposedly when you're when you retire, and then also Medicare is your health insurance. So you want to pay into that, right? As a self-employed, you want to pay into that. So if you can. Um, so yeah, so one of the things, this example here below is like, hey, when do you move to S corporation? There's a lot of considerations to when you move. One is you want to put yourself on payroll, and you're making enough money to do that, right? Like you make enough profits to where, maybe up to about $30,000 or so, you can like get yourself on payroll. So the beauty of putting yourself on payroll is you don't have to, you're now splitting the employee contribution with the company. So there's 7.65% comes out of your pay and 7.65% the employer now contributes. And you might say to yourself, well, yeah, I am the employer. So I'm still paying the 15.3%, right? Yeah, you're right. You are. But there's other um, considerations like now this is a deductible expense for the company. Like before, it's not a deductible expense. Like payroll contributions or the tax contributions, they are not deductible. But now under a payroll system, they are. So then if you start to look at doing all the numbers, I won't go through all this, but you're going to save 1.68% by having a payroll. And you're like, well, that's not a lot. But when you start to talk about, this is based on $100, $1.68. When you start to talk about thousands of dollars, that starts to add up. And the other thing, as a business owner, you can start paying yourself in distributions. So you pay yourself a fair wage, and then the rest of it you pay yourself in a distribution, which is not subject to payroll taxes. So boom, gone 15.3%. So now all of a sudden you're shaving that. So to get to that, the ultimate goal is to get into that so you can kind of like pay yourself. You're going to save a little bit on the deduction side and pay yourself in distributions too, right? So I end that with, hey, get you a good CPA or accredited tax preparer, tax professional. That's what they're doing. That's all this stuff that I'm talking about. That's what they do every day. That's what they advise on. That's what they're going to tell you. Hey, you should go to the S corporation now. You need to stay this way for a little bit longer. Another question. Lacey mentioned 1099 contractors. She's got a lot of those, and in her system, it'll spit out the 1099 at the end of the year and send it off to them. You get this a lot where people work for you, and you're like, are they an employee or are they a 1099 contractor? But you're kind of treating them like an employee, but you want to pay them like a 1099 because you don't have to do um, all the tax contribution. Because if you have an employee, remember that 7.65, you're now paying the 7.65% for them. You're matching that for them. So it's going to be an added expense in having an employee on payroll for you, right? But all that's deductible too. And if they're good employees, it's worth it, right? It's just that's why it's a consideration as to whether you bring them on payroll. A lot of people want to do 1099s because they don't have to pay that extra and it's simple. In a year, you send them 1099. You don't have to run payroll or anything. But the idea they have to qualify as a 1099. One is they have to work independently, right? So Lacey mentioned like a photographer. Photographer, they have to run their own business. They have to work independent, meaning they have to have their own tools. Like photographer, he or she has their camera. You know, they aren't necessarily supervised by you. They just come when you set the time to come make the shoot. They decide when and where they can do that. They also kind of have their own business. They're taking their own income. They may even have an LLC and do their own taxes and stuff like that. Um, and sometimes you have defined contract. stating, exactly what they're delivering to you, right? Coming to do a photo shoot, charging $1,500. This is what you're going to get when I take the pictures. You'll get, trademarks to them or whatever, right? That's all in the contract. And so those are kind of like characteristics of what an independent contractor is. When people start coming to work for you and they're on a regular schedule, they're using your tools, um, they're taking kind of direction from you on a regular basis, that's starting to sound more like an employee than a contractor. So there's always that fine line. You got to kind of determine, how you want to treat them. Just something to consider when you're thinking about employees. Uh, One other thing we were gonna go over here and is licenses. Um, I mentioned that once you start selling maybe $600, they want you to start filing um, uh, taxes and stuff like that, and doing business like as a business, right? When I say they, I mean the IRS and the South Carolina Department of Revenue. Another thing they're really interested in you doing once you start doing business regularly is getting your business license. In art, like in any business, you may be selling a product or it may be like more of like a performance or a service like Lacey is a dancer, so that's a little different, than if you're making pottery and you're selling plates or bowls or whatever it is. Like a plate or a bowl, you need a retail business license from the South Carolina Department of Revenue. It's called a retail license or retail permit. And what that does is it triggers you paying sales tax to the state because products are taxable. You need to collect, whatever the tax rate is in your county on that piece of pottery or product, right? So you need to get the retail license, and then you'll have to pay sales tax every month by the 21st of the subsequent month. And, if you're not doing a whole lot of sales, you can, cut it back to 1 year of paying those. Pay it every year. But if you're selling on a regular basis, then you need to pay it monthly. So you're collecting those sales tax from the customer and you're passing it on to to the state and the county. If you're in Charleston County, you might be paying 8, 9% sales tax. If you're in Orangeburg County, you might be paying 7%. So it's going to be different because Charleston has local option taxes that Orangeburg does not have. You just got to check those out. You also need to have a business license in the jurisdiction that you're operating the business. So if you're in Myrtle Beach, you should have a Myrtle Beach business license. If you're in Charleston, you need a Charleston business license. If you are in Charleston County, outside the Charleston city limits, you need a Charleston County business license. So wherever it is that you're headquartered and you're doing business, that's where you're going to need a business license. And you might need more business licenses. Like if you're going to a market, let's say you're in Dorchester County, you're in St. George, you got a business license in St. George, that's where your business is, but you're going to the market in downtown Charleston to sell your goods, where you're going to need a Charleston business license and a St. George business license. But the Charleston business license, you might just get like a day license, right? Or like what they call like a temporary license. Be a lot less expensive. Do it online. Not very difficult. But you just need to make sure wherever you're selling that product and you're actually physically going there and setting up, you have to have a business license there. If you're selling it online, you don't need that. You just need the business license like in the place where you're headquartered. Um, Withholding tax, we already alluded to that. That comes with payroll. Trade licenses, depending on what you're doing, there may be like more threshold for licenses. Like if you're a real estate agent, you have to have a realtor's license. Not a whole lot of trade licenses that I can think about in creatives. I'm sure there's some out there. But a lot of times these trade licenses, they want you to be qualified because like barbers, people are messing with your hair and cosmetologists with your skin and face and stuff like that. You want them to be like qualified and regulated kind of. Um, but in some ways, people see these as barriers to entry to the industry because it's a hoop you have to jump over to get into that industry, which is good for people that are already in it. But anyway, um, one other thing to consider is zoning. I mean, uh, if you're selling from your house or something like that, you may have to check into that. That's a little bit about licenses. Now I'm going to jump into financial statements. This is where y'all gotta take a sip of your coffee if you got it, or get ready to look at some numbers, kind of where the rubber meets the road. But these are extremely important. These are the these are the documents that you need to become familiar with to better understand your business and to be able to grow your business. Um, because once you can interpret these documents and kind of know where you're going with them, it's going to help you be a better business person, help you make better decisions about your business. And this is where good tax professionals and consultants can come in to help guide you and say, hey, yeah, this is you could be doing, some different things based on, the finances. But all this starts with what Lacey gave an overview of, which is good bookkeeping. If you're not doing, bookkeeping, this doesn't matter because you're not going to be able to get these statements if you're not doing that, right? So it shows you how important the bookkeeping aspect is. And then you can generate, some of these statements, and then you can do further analysis and understand, hey, looks like I'm on track. Hey, I can afford to do this, or I'm going to be paying this much in taxes, or maybe I need to make some purchases and reduce my, bottom line, or whatever it is. But there's basically three main ones that I'm going to go over, and this is a high level. This will be high level. Not to go too deep on it. If you want to go deep, you can go to like YouTube. There's a bunch of great videos that you can go down into. You can go to like your technical college and even get like a whole certification on it if you want to. And a lot of that's free now. I don't know if you'll know that. You can go to technical college and go for free. Certain programs like accounting, I think you can just do it for free. Um, but anyway, there's the balance sheet, the cash flow statement, and the profit and loss statement, which is the P&L or income statement. Um, Very important one. The balance sheet is not something that people typically look at very often unless you're like getting a loan. Then all of a sudden they want to know like what do you own and what do you owe, right? If you ever got a car loan, they're like you do a personal financial statement and you have to list like everything. Yeah, I own a house, a car, a boat, whatever else it is. I have this much money in my accounts. And then like how much do you owe? Oh, I have a mortgage, I own a credit card, all these different things. You're listing everything you own and owe. That y'all have seen that probably if you try to get a loan somewhere, personal financial statement. That's what a balance sheet is essentially, right? Except it's for your business. It's not personal, it's for your business. So what does the business own? What's in the checking account right now? How much? You know, um, does it own any equipment? Does it own any real estate? And then what does it owe? Are there debts to vendors? Those type things. Um, and so you can see that's kind of like typically what they call it a T sheet, what a balance sheet might look like. But it also might look like this as well, um, where you can see that you've got assets followed by liabilities. And then at the end, you have something called equity. So if you take everything that you own, all these assets, current and fixed or um, long term, they call them some of them. You add those up. That's this one they own 165,000 in assets. And again, remember I mentioned assets are the things that make you money. Assets work for you to generate income. So you can see that they have machinery, $17,500. Those machines make something, right? Which generates money. Like as an artist, you have tools, and depending on the type of art you're doing, those are the things. And of course, you're, generating the money as a crafts person. Um, but yeah, that's 165. And then In this case, they have long-term debt of 18,245. And so you subtract 165 from 18,245, you get 81,755. I'm sorry. Hold on. I missed the line there. I'm sorry. 18 and 81, you had 100,000 in liabilities. So you subtract that 100 and 165, you get 65 in equity. So on paper, the business is worth $65,000 on paper. Um, that's not paper and like the real market value are two different things, but we won't go down that discussion. But if you go to the bank to get a loan and they can see that you have 65,000 equity, that you have more assets than you have liabilities, that's positive. If you're negative, you're upside down, that's a negative, right? It might you'd have a hard time getting a loan if you're using the loan for growth or whatever, working capital, might be a little bit more difficult. That's why this is important. So it clarifies your financial position. It can improve some pricing decisions, help you work your price properly and plan investments, and build credibility and growth. But yeah, you can see where problem areas arise if you have too much in fixed assets. That might be a problem versus, how much you have in current assets. They don't have anything in accounts receivables, which is, or accounts payable. So those are usually two things you look at. Not in an art related business, maybe, but unless you give credit to people. The next thing is cash flow. Basically, cash flow is like your checking account. You see money come into the checking account, you see money go out of the checking account, right? That's kind of like money in, money out. How and what is your balance? Your balance is going up and down, right? Sometimes your balance is low, sometimes it's high. Tracking that over time is like a cash flow statement. How is money or cash moving in and out of the business? So you have these different uh, streams of revenue that are coming in, whether it's from sales or loans or other income, and then you got this bucket, which is that cash on hand, your bank account, right? And that money comes in, and money's going out. Everybody knows how that feels for sure. Money's going out. You're paying loans, you're paying people, you're paying material costs and rent. And, kind of that level of water in there is kind of also an indicator of, your cash flow, right? Obviously, if the water is real high and it's going over, that's a good thing. If it's real low, that might be not such a great thing. Might be kind of rough. Um, but how can cash flow projections help you when you need it? You can kind of set sales and expense goals. A lot of businesses are seasonal. So I know y'all might have like in dance, there might be like seasons where you do a lot of shows in the spring or fall or different times of the year and money comes in. And then other times of the year, maybe you don't have shows or not doing as much. So you can kind of project, hey, this is when the money's coming in. And so I need to like plan for when the money's not coming in, right? Because I still have, some of the same expenses. You can determine break-even points, plan for equipment purchases for replacement or expansion, um, and determine cash needs to purchase inventory for seasonal cycles and whatnot. It's good to know because really cash flow is king. That's the saying in business. Um, there's the income statement, there's the balance sheet and all this stuff, but like cash is the lifeblood of business. You got to have cash to operate, right? So cash flow is king. And so there's a lot of strategies as to how you manage that cash flow, whether how you pay vendors, the timing of payments, um, using other people's money, OPM they call it, for cash flow purposes. So it's all strategic in financial management. This last financial statement is the most important one. It's one that we look at the most is the profit and loss statement or an income statement. It measures your revenues and your expenses over a period of time. And it also tracks profitability, which is the goal of most companies because you have to make a profit to survive because you have to reinvest typically the profits into the business, right? Um, and you want to make a profit to pay yourself, to do things you want to do, the activities you want to do for your family and yourself. So it's important to be profitable, right? Um, so an income statement shows how successfully the buying and selling process has been managed. It's a performance measure, right? Um, your ability to grow the business and pay debt and support yourself. All those are important. And most important report you can get from your accounting software, basically. I used to print it out on a monthly basis. I look at it on a monthly and quarterly basis. Different ways to look at it. This is the basic formula for the P&L, and y'all probably all seen this if you've been in business for a little while. There's sales, that's the income. Revenues coming in. And then you got your cost of goods sold. So what is that? Cost of goods, it's a variable cost. Variable meaning that it's a cost that goes up and down. And it also has to do not with the service, but with a product typically. What are the costs in creating that product? So we're going back to pottery again. So what does it take to make that pottery? Well, you need the clay, you need the glaze, you need the tools to shape. When you go to sell it, maybe you need packaging to go with it, right? Those type things. Those are all the cost of goods that go into making that clay bowl, or that pottery bowl. And that those expenses and related to that go into cost of goods. And then so after you subtract that from sales, you get your gross profit, and that's the money you have left over to pay all your overhead, all your other expenses like your lease payments, your utilities, your marketing expenses, your insurance, your whatever else, right? All that other stuff that is more like fixed costs, and it's not maybe directly related to producing the product, um, which is important because you want a good gross margin yeah, you want a good margin and you want enough sales to create enough money to pay for all that overhead, right? So, and then, you subtract your overhead out from that, and then you got the bottom line, they call it the net profit, which is an extremely important number because net profit pays for your owner's draw, right? That's what you're paying yourself as a sole proprietor. And if you're on payroll, payroll is in the expense area. So you can be paying yourself, but if you're doing a distribution, it would come out of the profit, right? Profits also pay for um, debt service. So future expansion equipment is basically like three basic things that you can do with profit. One is you can pay for your family expenses, which is yourself and how you pay yourself. Another is you can pay for loans, and debt. And then the third is that you can pay for growth, which is expansion and whatnot, right? You're reinvesting. It's called retained earnings. You're reinvesting back into your business, right? And you pay income taxes out of that too. That's the fourth one. So how do I compile it? Easy. Get some accounting software. Yeah, that's probably the easiest way to do it. And with technology, that's getting easier and easier. Uh, really, these days you could probably take your if you wanted to take your bank statement and throw it into like AI into ChatGPT and say, hey, make a P&L from this, and do all the numbers for you and have something like you're looking at, which is a profit and loss statement, right? And I'm just going to show you this real quickly, and we're going to wind it up here. It's the last thing. This is what an income statement looks like. The top part is always your income revenues. And this is a landscaping company, so you can see their revenues come from services and sales and some other stuff like that. And then they have pretty low cost of goods here, right? So if they made almost 66,000 in income, they only spent 4,200 on their cost of goods. This is a service. They're probably cutting grass and stuff like that. So there wouldn't be a lot of expense in the cost of good. So you have a pretty big margin there because you got 61K left over for your overhead, which I don't know exactly what that margin is, but maybe it's like 90, 80 or 90%, something like that. Pretty good. You got 80 or 90% left over to spend. Um, and if you can keep that same margin as your revenue goes up, that, gross profit line, gets higher. So that's good. And then, you always have your expenses down here, from insurance to payroll. If you have a loan, an interest expense would show up on here, but the principal payment doesn't. So you have to keep that in mind. Remember, I said that debt is paid out of profits. So your principal in a loan is actually paid out of that net income on the bottom. Not, and it doesn't show up in this, which is kind of like that's why you need to see all of your financial statements. On a cash flow statement, you would actually see that principal payment, and it's because it's coming out of your cash flow. So you kind of have to at least know that. A lot of times, what I've done in the past without having to do a cash flow, I'd put another line below net income that says principal payment, and then you subtract that, and then you got maybe a more of a shortcut or kind of a cheating way to understand what your performance is like. The best way to do is to look at the cash flow statement, right? And the balance sheet. But anyway, you see you have all your expenses here. Typically, when you pay taxes, these are all deductible expenses. So you're deducting all this from the income that you're making. And then you're coming down here, bottom line, they made $14,000, which may be what is, taxable for that self-employment income, but it's probably going to be less than that because you might deduct some of there's some other deductions that you can make after this bottom line. That's the income statement. And yeah, doing an analysis of an income statement is kind of how you increase performance. Like there's certain ratios, like I mentioned, like a 90% gross profit. So that's like a cost of goods ratio. So this is landscaping, but you can kind of look at your creative industry. And if you're doing pottery, it's like, what's like the a common cost of goods for a pottery operation, right? You can actually figure out that number through research. And it's like, are you spending too much on pottery for what you're charging? Maybe if your cost of goods are really high, maybe your ratio is like, higher than the industry standard. Maybe you're not charging enough for your pottery because you're buying better. Maybe you're buying better materials or you're doing some things, so maybe you're not charging enough. So you can kind of look at pricing theory, by looking at these, and breaking them down. You can do the same thing with your expenses under your overhead, like your payroll expense. 37, for this business is about a 60% ratio. So that might be perfectly fine for that type of business. Is it fine for yours? You do the research, you can kind of look at anomalies and say, hey, this looks kind of crazy to me. Why are we spending so much money there? And a lot of budgets are based off of these profit and loss statements. So, like at the end of the year, you go back, print this out, then you create a budget for the next year because you have like a history now. You can say, okay, we made 65K. Let's try to make 75K in income. So you can set a goal and you're creating a budget, right? And maybe you want to make 30K net income. So that's a goal. So you need to double your net income, and maybe you're going up 15,000 on the revenue, so that would mean your expenses have to stay the same. But so anyway, the idea is that hey, you can look at this, you can create budget and set goals from historicals, and then you can as you go along, kind of compare it and say, hey, are we on track here? What do we need to do, to kind of change that? So that's a little bit about financial management. And I'll end it right there and answer any questions. This is my contact information, which reach out anytime. Our service is free. We're here to help connect, answer questions, just talk to you, about your day, whatever it is, however we can help. It's always good to have a sounding board. So finding whether it's SBDC or other people to confide in outside of your family, it's always a good thing to do.
Thank you so much, Jim. I think, for a lot of artists, when we get into finances, especially after tax season, it is a time to like think about all of these different aspects and improve bookkeeping, because knowledge is, of course, power, and it can help artists um, have the agency to really dictate their practice in their business. We do have a question in the chat first. I think this is more geared for you, Jim. If you're a vendor at festivals and travel to different areas, you'll need so many licenses for different cities, which is something I do hear and I've heard from different artists too. Is there any universal or one way to avoid these additional licensing? It's such a good question, but
Yep,
what are your responses?
this has already come up at the General Assembly at the State House. They have heard this. There are many complaints around this issue, and there's a struggle or battle between the state and the counties. And the counties don't want the state to have a universal license, which would make a whole lot of sense because you can get one license and go wherever. Because what they say is the state is going to take tax revenue from them, right? And the state is saying, "Oh no, we'll pass this through," and the counties are like, "Yeah, we remember 15 years ago when you said that and you didn't do that." And then so there's always an ongoing struggle between counties and the state governments as to, finances and stuff like that and control. So that's been in the General Assembly and brought up, but it couldn't get the political. It hasn't been able to get the political legs to be passed yet. I feel like it will one day, because it just makes too much sense. And you would say common sense, at some point should prevail. But still, that you got to go to each city and get the license, as it is right now. And some are easy to do, like maybe a Charleston, go online, get it. Other ones, you go to a little small town. You got to go to the town, office and get the license. It's a little bit more difficult. They don't have all the maybe uh, you know, websites in place and stuff like that.
It looks like we have another comment or question to just enter the chat too. I'm trying to read it quickly. Um, okay, I think this kind of goes back to like basic techniques of bookkeeping, but do you have any techniques for bookkeeping and keeping receipts? I heard a separate credit card or bank account, anything other than logging everything in Excel. Is there a software? Um, I noticed on my taxes I had to move different locations into different categories. Do you have these so we can organize our bookkeeping? Lacey, I don't know if you want to take a quick note at that question because I think this refers to some of what you shared. But then also, Jim, I might have you add on to that as well.
Yeah, I personally use QuickBooks, but like you mentioned, there may be an AI program that could, do the same thing that, QuickBooks does for you, or at least, do something a little bit more than just you, manually logging in an Excel sheet could do. But, the accounting programs have a lot of different perks. Like Jim was mentioning, you can do a lot more than just the bookkeeping aspect with those programs. So if it makes sense for your business, I would definitely say that money could be worth it. And yeah, I mean, and then if you wanted to keep it simple, and still not pay for anything, I would just recommend maybe looking at those different categories where when you filed your taxes, what categories they were asking for, and then just, for the next tax year, using those categories so it's already ready to go.
Yeah, that's good advice. I will give one disclaimer for AI, and y'all probably know this. If you're gonna put your personal information into like I wouldn't use like an open AI. You probably want like a subscription, so that there's like supposedly there's like a wall, or protects your information. If you just go into like a free AI, and I might be wrong about this, but I think that, your information might be, it's being used. It's a large language model, right? So they're looking at all this stuff. But just keep that in mind when you put stuff in AI. Um, yeah, I mean, there's a lot of cool apps out there for tracking receipts. Some are free or freemium, which means they're free at first, and then for additional features, you start paying, charges and stuff like that. But you can take pictures with, your phone and different things to organize receipts. Um, you know, Technology is advancing every day too. There's always new things coming out to make you more organized, make things easier for you. But most people I mean, those software programs, QuickBooks, and there's a bunch of other ones. I mean, they have so many cool features and tools and stuff like that. They can help you. You can send invoices. You can just do all kinds of stuff with them. But it's an investment too. So you have to figure, hey, are you, ready to, make the investment in that particular tool? There's some free ones. I've used Wave apps before. Wave apps is free, and for simple accounting, it's good. Um, and it's really a freemium in a way too, because it's owned by ADP, which means if you ever decide to do payroll, hey, they happen to do that service, right? So you can get them to get help, and of course, then there's other things you can buy as you get more sophisticated. Wave apps with an S, yeah, that's right.
Mhm.
Yeah.
I think connected. Oh, sorry, Lacey. Go ahead.
Oh no, I was just gonna say, and correct me if I'm wrong, and speak with a tax professional. But that's if you're using something like QuickBooks and paying for a subscription, that's something that you can potentially deduct. That's a business expense that could be deducted at the end of the year.
Yep.
So might be worth
Business-based
it.
business-based subscription. And yeah, I'll just echo Jim with the AI. Please do be careful with what personal information you disclose to AI and make sure that you're doing what you can to safeguard your own information and the information of your business as well. AI is a tool, but please do um, uh, be careful with how you use it, especially in an open AI version. Um, Related to this is a question in our Q&A. Uh, One person says, I have a separate bank account to keep all charges isolated to that account's credit/debit card. What advantages do receipts give me that the record of charges on my bank statement can't provide? Um, I think just briefly looking at this question, I would say, in case of audit, it's helpful to have receipts for exactly the items that you purchased. Bank statements usually only share like where the purchase was made, but not exactly what the purchase was made for. I don't know if Jim and Lacey, you have any additional information there.
Yeah, I agree with that. It's just more detail on the receipt. It'd have a description of what you're buying on the receipt and where you bought it from, the dates, and how much you paid and all that stuff. Whereas the bank, from my experience, is sometimes you can't even tell where it came from, what it was. I see stuff that pop up my eyes like, what was this? No, I can't really tell what this was. I see how much it was for, but from that description, I have no idea what that is. So if you're audited, then they're going to ask the same question. They're going to be like, what is this? You're going to be like, oh, well, I don't know. You know? So having the receipt is a good backup.
Yeah, I agree. I think the more documentation that you can have about, everything you do, the better. So if somebody comes asking about it, you got all the stuff to back it up.
Absolutely. I think it's helpful to have a separate card that you're using for your business to also help track like what exact expenses that you are making, because that does help when you're trying to track down all your receipts at the end of a week or quarter to make sure that you have everything on file as well. So I think working with both is a helpful practice. With so many website purchases, can we take screenshots of our receipts? I've definitely seen screenshots of receipts, scans of receipts, um, holding them, paper copies. I think that kind of works with what best practices that you kept to. But yeah, Jim or Lacey, do you have any other thoughts to that question?
I would just say I agree. I think, I would just really check with a tax professional because I think the purpose of the receipts and all of this documentation that we're talking about is in the event of an audit. So I think they could probably speak more to that about what documentation you need to have. But I would, yeah, just recommend more than less.
I agree. Thank you, Lacey. Um, as we're concluding our program tonight, if you do have any other questions, you're welcome to drop them in the chat. As I mentioned at the start of the program, we do have a feedback form. This will also be shared in an email to everyone following the program, with some added resources. But we do appreciate everyone's feedback as we, curate other programs that are around arts and arts-based businesses. But if there are no other questions, yeah, Lacey?
I have a question for Jim. And I think maybe looking in the chat, maybe John Michael will appreciate this question. 'Cause I see that they are looking to pursue nonprofit status, and that's something that might be on the horizon for my company as well. So I was wondering if you had any recommendations for anyone in your organization that would be good to connect with regarding, all the nuances with nonprofit, because it's very different.
Well, our mission states that we work with for-profit businesses.
Mm,
So SBDCs are just, we just work for non for-profits. But that is, we do end up working with nonprofits from time to time just because it's more if it's more of like an enterprise-based type of a nonprofit, it's more like a business, I guess. Run like a business, it's just that nonprofit structure. But yeah, depending on where you are, I can recommend a few people. I can also recommend people that work solely with nonprofits. Because it is a different, it's totally different. It's like a lot of other considerations, tax returns are much different. You have a board of directors, there's control issues, there's ideas about how, those assets are held, depends on how you're treating the nonprofit. So a lot of considerations and great to have like a good advisor that knows a lot about nonprofits. And there's some good organizations out there to do that. So I'd be happy to pass that along.
great. Thank you so much.
Thank you. Yeah, Jim, if you even want to include some of those and send them in a short email to me, I'd be happy to, follow up with that too, if
Okay.
that's something that you're comfortable with me doing. Um, But otherwise, as we're concluding today's program, thank you so much for joining us. You know, one of the best tips I've heard about managing finances, especially as an artist, is to couple your tasks with something enjoyable that you can look forward to. So if doing your finances feels like pulling your own teeth out. Grab a nice cup of coffee, treat yourself to a smoothie during, financial management day. Make it a routine that you can look forward to. Can be a nice way to make sure that you're, keeping up with all of your business needs.
Turn
Because I
turn
know
on
as
some good
create
turn on some good music too.
Yeah, because as creative professionals, this is something that's part of what we do, but it's not necessarily always the main purpose for why we do it. So, I want to help artists navigate this system as easily as they can. So, but thank you so much, Lacey and Jim, and to our attendees who stayed on our call today. We appreciate you. If you're curious or have any questions about our South Carolina Artist Development grants and programs, you're welcome to reach out to me. I'm the one that's been emailing you back and forth for different things. But my email is mdrake@arts.sc.gov. I'll put it in the chat here. If you do have any questions, you're welcome to reach out. But otherwise, we'll conclude today's program. This is our last program in this fiscal year. We've had such a great season, and we're looking forward to having more programs in the future. So thank you so much. Thank you. Thank you. And hope everyone has a good night.